In today's video, we are going to look at something very interesting because recently I had put out a video where I bought two houses in Bangalore and a lot of you guys had questions on my home buying strategies, right? So today I'm going to reveal all of these personal finance tips that I'm actually using with live examples of what I'm doing with my current house right now. So stay tuned. Okay, so before buying a house, there is a few checklists that I do, right? Number one is, do I have 25% of the property value of cash in hand? Because usually what happens is builders and banks usually have a tie-up where sometimes it's 90% loan, 10% down payment, sometimes it's 80% loan, 20%, or it's even 75-25. Number two, whatever house I'm buying today or in the next near future is only for an investment purpose. It is not for me to go stay in that house, or it is not for me to go rent that property out as well. Number three, please don't compare this to stock market because the returns over there are very different. The returns in real estate are very different. So it is just a diversification mechanism. So only after I look at all of these three things is when I realize, okay, I'm ready to buy a particular house, and now I will start looking at how to buy it. So that is the next part. Now, one of the most difficult things when you're actually going to buy a house is, number one, how do you find the right price? Number two, how do you find the right locality? Number three, whether the price in that locality has already gone up or it has not moved, or it has gone up too much that you're already too late to the party. Number four, which geographical area to look at. And number five, which project to look at as well. So these are the different type of things that you need to look at. And you can also look at another thing, which is, do you want to buy in standalone buildings or do you want to buy like reputed builders like Lodha, Brigade, Prestige? So it depends on that as well, because they come usually at a slight premium also. Whenever you try to buy the property, the biggest problem which I also face, which I try to find out as much as possible by talking to brokers or talking to real estate owners or talking to people in that area, is, boss, what is the right price? Because even if you look online, there are not very straightforward prices that you can get. So it is a very big hassle to get the right price. So for this, I use some tools online that actually help me get the right price. So let me show you some of the tools that I use, right? Now, one of the tools that I use is a tool by Magic Bricks. Now, Magic Bricks, we've all heard, is one of the most reputed players in the space. So under this, there are different type of tools that this Magic Brick basically gives. There's one property valuation, rate and trends, area converter, PropWorth, buy and rent. So all of these things are there. A tool that I recently came across was PropWorth. What happens here is, I'll tell you. First, I go choose my location. So for this example, I'm going to choose Bangalore because I have a property in Bangalore, right? Now, if you look at this here, you will see the price trend in Bangalore, which is again very important. And now if I want to find a particular house or a particular locality in which area, this basically gives a good understanding. So as you can see, for example, this is a 1 year graph. The price trends of some places have not moved too much. That means it's good for me that I can actually start taking some good positions in these places, right? Now, if you look at Bangalore as a whole, I also look at which area is developing. For example, right now Devanahalli is developing a lot. So I will start looking at price trends in Devanahalli, which again I know for a fact has not moved up too much as of now, right? Apart from that, this tool also gives me some very important information. For example, what is the cost per locality, which is again very important, whether it's mid segment, affordable segment, or luxury segment, right? So a lot of people buy houses in Hebbal, they buy houses in Whitefield. So in the luxury market, you can see that in the last 1 year itself, the price of properties in Whitefield has gone up by 23.4%. Same with properties in Hebbal has gone up by around 25%, right? So this basically gives me an idea of, see, for example, Uttarahalli Main Road, Hosa Road, all of these have already gone up quite a lot. So I usually try to find, if this has gone up quite a lot, what is the next location after Hebbal? So if Hebbal has gone up by 25%, then I go one step ahead to maybe Yelahanka, then go one step ahead to Jakkur, and then go one step ahead almost to Devanahalli. So that is how I look at it, because there is a lag time between this, right? So you can look at that, or you can look at projects also. So I usually look at projects as well, because I look at what is going on with Shobha, what is going on with Prestige in those areas to understand what is the market right now. Apart from that, what you can also do is, this is what I was doing recently. So I have a 3 BHK flat, right? Which I just bought just a few months ago. In Feb is when I got it. Again, only for investment purposes to sell. So basically I try to get an estimate out of it. So this is a flat 3 BHK. Let's say this is 1329, and I'll show you information about all this with proof. So don't worry about that. Let's assume this is 20 floors. I have my house is on the 12th floor, and this basically gives me an estimate of what is the 3 BHK flat price of my Brigade Ivory phase 1, which is at Devanahalli, which is around 93.69 lakh. Now the property is going for 90 lakhs plus and minus. There are some other utilities and other stuff, which goes up to almost a crore. But if you look at it only from a property perspective, it goes to around 93 lakhs is what the estimate is, right? Now I'll tell you what this is, right? PropWorth is basically like a valuation tool. So it instantly gives you any kind of valuation of any property, but also gives you a lot of understanding on price trends, what projects are doing well, what is doing bad. Everything will come into this particular region, right? And what they do is, because they have so much data, they have used this entire database of the house listings in each space, used algorithms to give you a 98% accurate predictions on this, right? So this is something that I use to look at what is good, how they use AI to make things better. And obviously there are a lot more things that you can look at as well, but this gives you a fair bit of idea of what is going on in the entire market. So basically, if you are planning to buy a house or invest in a particular property, you can definitely give this tool a quick run through. It's completely free. You just have to log in and use it. So you can just definitely go and check this out. I'll leave the link in the description as well, right? Now, coming to my next strategy, right? Now that I've found, like, let's say PropWorth has given me an idea of which area I want to go. Let's say I've found Hebbard, I want to invest in that area. Once I have found all of this and I have found which project that I want to do, the next step that I do is to find the project. I usually find a project which is 1 to 1.5 years away from construction complete, and I should get my OC in the next 1.5 years. Now, why do I do this, right? Because I am in the sole intention of selling this property and I want it to be 1.5 years away. Why not give it right now? Why not buy ready-made property? I don't want that, mainly because I want to take advantage of something known as construction linked payment plan. So if you have not heard of construction linked payment plan, basically it means that the builder will only get the amount of money for each slab that he has done. Let's say he's built 3rd floor, he gets a particular amount. Let's say he's done 7th floor, he gets a particular amount. So as and when the construction progresses, that is when the payment demand will keep coming from the builder. So that means now I have an advantage over here. What is the advantage? I'll explain with more detail. So let me just show you with an example. So this is my flat login that is there, and you can see the flat details that are here. Now, if I go into payment request, this is something that the builder will give me. So you can see here that on agreement, I had to pay 9 lakhs. On casting, on footing, I had to pay another 9 lakhs. Demand came out. On casting of ground floor, 5th floor, terrace, 10th floor. So what happens is, as of now, only 56 lakhs plus the initial booking amount that I had given around 9 lakhs. Around 60 lakhs has only been asked by the builder. Another 40 lakhs is still pending and it has not been raised yet. So that means I don't have to pay the entire amount to the builder right now. That means my loan account is not going to the maximum potential. And I'll talk about how I use that also very efficiently. And as you can see here, if you look at the receipts, I have paid around 5 plus 4 plus 5 by myself, which is around 14 lakhs. Remember, this is a 1 crore property. So 25 lakhs cash I had kept, which is 25% down payment. But out of that, I don't have to give the entire amount right now because the property is not ready. So I've only given 15 lakhs right now, and the rest I have funded it with loan as of now. Now, technically the loan amount should be 75% of 1 crore, which is 75 lakhs. But it is only 42 lakhs right now because they have not asked me more and more demand data yet. So I still have time. Now, this is where my advantage kicks in on day one. And I'll tell you what the advantage is. So now let me show you how I game the EMI as well. So now let's put my loan amount as 75 lakhs. Why? Because 1 crore property, 25% is down payment and 75% is the loan amount. So 75 lakhs. I have not given 75 lakhs. I've only given 42. But let's assume 75 lakhs is my total EMI that will go out, or the total loan sanction that will go out. I have taken a loan tenure of 30 years. Ideally, lower the better, because if you take higher, your interest is more. But remember this, I am not going to keep this loan for 30 years. I am going to close it within 1.5 years, right? So if I now recalculate my EMI comes to only 57,137, right? Principal amount is 75 and interest amount is 1,30,000. But the thing is, I am not going to keep this for 30 years. And even the EMI, I am not going to pay 57,000 right now. Because technically, even though my EMI standing instruction from the bank says I have to pay 57,000 today, but my disbursed amount is only 42 lakhs, right? If my disbursed amount is only 42 lakhs, then technically I'm only supposed to pay 32,000, but I'm automatically still paying 57,000 right now. That means 20,000 rupees per month prepayment is happening by default by itself, right? Even now. Now every 3 months they will give me 9 lakhs, so then 9 lakhs will add, but still max to max, even if I calculate 75 lakhs, it comes to approximately 57,000. Now this is one part, okay? So you already know that I'm prepaying 20,000 right now, which eventually will catch up to 57,000. But now comes the better part. Now let me show you with math how I'm going to reduce my prepayment quite drastically, and this will work for people who have long-term loans as well, right? So let me take the whole EMI amount, which is 75, or actually let's do a proper math, right? 1 crore. Okay, 20%, I did 25% down payment. I will continue doing. 75 lakhs is my loan amount. Interest rate is 8.4. Loan tenure is 30 years. Let's say this was barely anything. They refunded it back to me. And let's say my loan starts from August, right? So let's put all of this as 0 because I don't have any other expense because I'm going to sell this flat. Now, my actual EMI amount is going to be 57,138. Now, my salary, okay, coming to my salary, how much can I actually pay as an EMI? Now, if you look at my salary, and I'll be very open and honest with you guys, I get a gross salary of 4.5 lakhs, but net salary, which is cash in hand after cutting tax and everything, comes to around 3.1 lakhs, okay, which is cash. Now, out of that, my fixed expenses is around 1.5 lakhs, okay, whatever I have with my other stuff, 1.5 lakhs goes in that. I still have 1.5 lakhs left. Now, if I want to, I could have taken a 10-year period and paid a higher EMI on day one and paid less interest, but I would not do that. I still took 30 years, right? Because I wanted the principal and EMI to be low so that I can start prepaying on day one. So what I do right now is what I'm doing every month. I am prepaying 75,000 is what I'm putting as EMI. Instead of 57, I'm putting 75,000. Now I could have taken a loan of 75,000 directly, but I did not do that only because it gives me some kind of flexibility, right? Tomorrow if something goes wrong and I'm not able to do it, I'm still only paying 57,000, which is completely fine. And technically now I'm only paying 32,000 because 42 lakhs have been disbursed. So if I do this, let's say that 75,000 is what I do every month. But out of that only, let's say 57 minus 75, let's say 18,000 is my prepayment every month. So this is what I do every month. So if I don't do 18,000, okay, let me just show you. My total interest is 1.3 crores and my total schedule is 30 years. Now if I just add 18,000 rupees per month, my interest comes down from 1.3 crores to 54 lakhs and my term comes down from 2024 to 2038. Instead of 30 years, it is now only 14 years, which is quite insane, right? But I don't do this. I do one more thing. Apart from just paying 18,000 more, every year I top up and pay one extra EMI. Now what I do is every year, even though it is supposed to be 57, I will still pay 75,000 at the end of the year. This usually comes from my bonus or variable income, right? But I do this just once. Okay, so once I will do it, automatically my interest came down from 54 to 45 and my August to 2036 now. So only 12 years, even though I've taken a 30-year loan, I'm back to 12 years. Now listen to one more beautiful thing. As I said, I am not going to keep this for 10 years or 12 years. I am going to sell it in 1.5 max with some delay, 2 years with OC coming late and all of that, 2 years max. So all I need to do is, if this is my calculation, how much interest am I paying for 2 years? So if I'm starting in August 2024, then if I end in 2026 August, how much interest would I pay? That is the major question. So now the interest that I would pay is 2,58,000, 6 lakhs and 5 lakhs. So 6, 7, 8, 9, 10, 11, 12, 13, almost 14. So 14 lakhs of interest I'm paying. So I've got the house for 1 crore. Around 14 lakhs would be my interest that I paid. So 1.14 is my now buying cost. And let's say tomorrow I want to register this with 5% stamp duty and whatever. Let's assume another 10 lakhs on the top, right? So 1.24 crores would be my buying amount for this. So that means if I'm buying today for 1 crore, then I need minimum 20% or 25% increment in 2 years for this property to break even. But if I want profit, then I need this to go up by 40 to 50% in 2 years for me to make a significant amount of profit. Because if that does not happen, and I have to wait for another 1 more year, then my interest goes up again. I have to pay another 5 lakhs of interest. So at that point in year 3, I would start prepaying even more because I don't want to pay such a big loan amount, right? But this is how you see how you can reduce your loan from 1.3 crores to almost 45 lakhs by just paying 10 to 15,000 more, even for a 1 crore property, and just do one extra EMI installment at the end of the year. And everything is doable and you should definitely do that, right? Now, even though I had 1.5 lakhs, I can still prepay 1.5 lakhs today, or let's say I keep cash some amount. But what I do is I start investing in the market on the side because my interest is at 8%. Market is giving me around 15-20% today because of the bull run. Even worst case, without the bull run, it'll give me 12%. So always I'm making a good 4% arbitrage. So I let that grow in my mutual funds and I will keep paying the interest here. And the minute that balloons up, I will remove that and clear the entire interest off. and then I have to just wait for the property to now appreciate. Worst case scenario, I'm saying. So I will use interest to play as an advantage for me. So guys, just to conclude, I wanted to show you how I choose a property, how I do the risk reward ratio, how I do the math. So if I'm going to keep it for 2 years, I need minimum 25%. And if I feel that the property is not going to go up by 20-25%, I will not invest in that property. I will wait. I will find some other opportunity that might go. But the property that I've bought, which is that Brigade Ivory, I believe that it will go up by 20-25% minimum in 1.5 years, and definitely will give me a profit in year 2 to year 2 to 2.5. It will definitely give me a profit. Why? Because the new airport has come. There's a lot of development happening in that area, and I've got it for a very good rate with a very good floor rise as well, in a very good Brigade kind of a trusted property. But this is all the calculation that I do before actually investing. And one of the key things that I do is, first, my ability to pay the EMI is the most important thing. Even though I have a higher ability to pay at 75, 80, 90,000 EMI, I still take a lower EMI so that I start prepaying like crazy. Even though now my interest is 32,000, I'm paying 75,000 per month as my EMI. So already I'm paying back my principal, which is reducing my interest component, so that at the end of the day, instead of 25%, maybe I just needed to go up by 20 to 23%. So that is how I calculate everything. Anyway, this was just a very quick information video for you guys. I hope you guys enjoyed it. And if you did, let me know in the comment section below if you have any doubts, any questions on home buying. I usually do it in Bangalore because I keep looking at the properties there. But if you have any doubts or any questions, feel free to ask, and I can help you with whatever is required, with whatever knowledge I have. Okay, this is me, Shashank Udupa, signing off. Take care. See you guys. Bye.